Hey everyone, John Howell here with you today, and in today's video I'm going to teach you and I'm going to give you some tools and techniques on how to find really good trades, okay? See, most people when they're actually trading the market, they actually don't know what they're looking for. There's no checklist to actually start checking off, and they don't really know in the back of their mind what is a really good high probability trade, okay? And what are the things and the tools and the system that actually goes with to start creating a high probability trade. So I'm going to give you some really good foundation to what creates a really good high probability trade. And then you can, if you have your own system, you might be able to add some of this, or you might be able to add this to your own system, okay? Now, that's what I'm going to talk about today. Now, with this particular method I'm going to teach you today, and these tips I'm going to teach you today, what this is all about is that in my early trading career, I used to only trade the day chart, okay? I used to only trade the day chart. And what my mentor said is that you're probably trading a lot more, but you're missing out on the really good high probability trades. He said, what would you rather trade? Would you rather trade more with lower probability or less with high probability? And I said, of course I'd like to trade less with higher probability. So what he said, okay, instead of looking at the day chart, you need to bring your charts back to a weekly chart, okay? A weekly chart. Apologize about that if you can't see that there, but it's weekly chart, okay? And that's what you need to do. So as I'm going through this presentation, we need to understand the importance of the daily chart and the weekly chart. Most people trade the day chart, but I want to bring you back to the weekly chart and show you why this is so important to use the weekly chart on a longer term scale, okay? Now before I continue with this, I must say to you that investing in the stock market is risky and it can cause substantial financial loss. Okay, I don't know your personal situation, and I need you to understand that there is risk at trading. And what I'm providing for you today is only general advice. Okay, so make sure you keep that under your belt. This is only general advice. I am licensed to give general advice by the government and Australian Stock Exchange. I am unlicensed on that to make sure that I can give you this general information, okay? So, but just make sure that you understand the risk, okay? It is very, very risky out there, and if you're not really sure about trading, don't trade, okay? Make sure you get yourself educated, make sure you paper trade, and so on and so forth. Okay, right, now that's that. Weekly charts. We need to be looking at weekly charts because they are king, okay? If you're looking to trade the stock market or even the futures market, now this can apply to you if you're trading, say, you know, a lower time frame. Let me explain here. If you're trading a day chart, okay, if you're trading a day chart, you need to be looking at weeklies, okay? Fair enough, okay, so that's why it's really important. But if you're trading, say, like, let's just say a 30-minute chart, or even like a 15-minute chart, then I would say it's important to use the 240 or the 300 chart. Okay, makes sense? So even if you're an E-mini trader, or if you're a day trader, if you use the day, if you're trading a day chart, then look at the weeklies, okay? And you know exactly what to do when you're looking at this longer term time frame chart. If you're trading a 30-minute to a 15-minute chart, or try to look at the 240 to 300-minute chart, okay? And you know exactly what to do in a minute when we're looking at those long-term time frame charts. Now, let me take those off, and I'm going to show you what you're looking for when you look at these long-term time frame charts. Now, once again, let me explain something here. When we're actually trading the market, okay, let's just say, for example, you're trading a 15-minute chart, okay? You're trading a 15-minute chart. What you're looking for is you're looking to trade on the 15-minute chart, but you're looking to get your parameters, P for parameters, you're looking to get your parameters on, say, the 300-minute chart. The 300-minute. Okay? Now, what I mean by parameters, I think I'm saying that right, parameters? What I mean by that is this. If we're looking at a 15-minute chart, the 15-minute chart's going to look like this, right? Okay, it's going to be, what is that? It's going to be messy. But if you look at a 300-minute chart, what's it going to look like? Okay, it's going to look nice. Therefore, on the 300-minute chart, if we have a look at this on the 300-minute chart, if you trade in this. Now, this 300-minute chart, remember this 300-minute chart is also like the weekly chart, okay? The 50-minute chart could also be like a daily chart. It's the exact same thing, just chunked down to a small time frame chart, okay? So what we're looking for is we're looking for two things. We're only looking for two things on the longer term time frame chart. We're still looking to trade within the day or the 15-minute or the 30-minute if you're a small time. But what we're looking to find parameters, okay? Now what is that? The parameters or the structure we're looking for, which we're trying to find major supports levels, okay, these major levels up here, and we're trying to find if there's any channels going on at the moment, okay, if there's any channels going on at the moment. So, hey, that actually connects up really well. Fantastic. So, what we're looking here is this: we're trying to find these levels here, so we know what to trade with and not trade against. Okay, what do I mean by this? Let's just say, for example, you're on your 15-minute chart and you're only looking at your 15-minute chart. And suddenly the market, let's just delete this here. And let's just say, for example, we'll use this little level over here, okay? It was over there. And let's just say, for example, the market came down through to here and came down right to this spot here, okay? But as the market was coming down on the 15-minute chart, guess what you got? You got a sell signal, okay? So I'm not going to go into what sell and buy along and all that sort of stuff is. But sell simply means you can make money when it goes down. So you've got a sell signal here. Now, if the longer term time frame chart is actually showing these points here as really good support level, what's the likelihood of that breaking there? Very low, right? Very, very low. Why? Because it's proven all the way up that that point right there is indeed and is in fact a strong support level. So what would happen is if this point right here, if this point right here is a sell signal, okay, is a sell signal, what's likely going to happen? Is that going to be a high probability or is it going to be a low probability trade? It's going to be a low probability trade, right? It's going to be a low probability trade. Why? Because when we actually look at this, more than not, you'll get a sell signal. You want the market to go down. It might go down a little bit, but it'll end up doing this again. Why does it do that? Because you've got the longer term time frame chart, right? Longer term time frame chart, you've got major support levels coming in that have been there, you know, for in this case, if it's a 300-minute chart, in this case it might be a month or 2 months, okay? If it's a weekly chart, if it's a weekly chart, it might have been there for 2 years, 3 years. Okay, are you getting what I'm saying here? We're looking for these levels, so when we start to get down here, we won't trade against it. In fact, if we get a nice little bounce off there, and let's just say that's the 300-minute chart, and we start to get a nice little bounce up here, this is the area we want to go long in. Okay, we want to go long in. That is the area that is the most high probability setup. Why? Once again, is because of the longer term time frame. So make sure that you're using this in your arsenal toolbox in your trading, okay? I used to be just when I trade the market, I used to just be a smaller time frame trader, a 15-minute and 30-minute, sometimes even 5-minute chart, okay? But and also used to just be a day trader. But now I'm using the weeklies as looking for setups, and then I'm waiting to time my way in on the daily chart, or I'm looking for setups on the 300-minute and time my way in on the 15-minute, 60-minute, and so on and so forth. My probability has gone much higher because of that, okay? Because of the whole situation there. So that's basically it, what I wanted to teach you today. I just want to make sure that you're using these, okay? Use these levels here as setup levels. So when you're looking at the weekly chart over here, if you look at, say, if you're a day trader on the stock market, you just buy and sell shares. If you're in the United States watching this, or in the United Kingdom, even in Australia, and you actually like buying and selling shares, we'll use these levels here to know where good support and good resistance is. And once again, if you've got a good support down here, and on your smaller time frame chart, it actually starts picking up through here. And that point right there is that point right there. Then you have a major high probability trade for it being a profitable trade. Okay. So I think that's all I wanted to explain today. Just remember, just the recap of what you've just learned today is that use a longer term time frame chart. If you're using a 5-minute chart, use something a bit longer just so you can see where the overall trend is, so you see where the overall major support and resistance lines are, and so on and so forth, okay? This will really help you in your trading, because what will happen is you won't take this sell signal here, okay? Yeah, you won't. If this was a sell signal right here, you wouldn't take that. What would you do? You'd wait to see if this major support over here is going to hold, and then if it does get a bounce, then you're more likely to go long there if you got a buy signal, okay? If you get a buy signal at these levels here, it's much more high probability, okay? Now, just one more thing, and then I will let you go, is just this one more thing, and what it is this. Let's just delete all this off. And I want to show you here. We'll just use this example of a weekly chart, okay? Weekly. And what we're doing here is this. I want you to understand when to trade and when not to trade, okay? This is a major important thing that I learned a long time ago. Let's just say we're doing this, okay? Let's just say the market's doing that. Now, where's the trend here? It's clearly up, right? Where do we have? We have support resistance lines. We probably have a major trend line going through there somewhere. Major resistance line going through there somewhere, okay? Now, if you're trading this particular market, what would be a good time to go here? What would be good to go here? Go long, right? On your smaller time frame chart, remember, on your day chart, or your 15-minute and so on and so forth, okay? On your day chart. Now, as the market gets up to here, as you know it's been up here, as the market gets up to here, would it be a good time to go long there? No, it wouldn't. In fact, it'd be a good time to go short. Now, what I recommend is not getting greedy and just waiting, because the trend is clearly up here. You want to be going with the trend. So once you get the pullback, if you start getting into these levels through here, again, this is where you want to buy it here, and buy it there. Okay, that's where you want to buy it. You want to buy it, and so on and so forth, okay? Buy it, maybe sell it up there, buy it, sell it. I know that's not exact, but if you could buy it and sell it here, buy it and sell it here, buy it and sell it here, and wait for the market to get back down and then buy it again, guess what's going to happen to your probability? Way higher, okay? So, do you understand what I'm saying here, okay? Use the longer term time frame charts. Please use this. Just check it out for yourself. Check the facts out for yourself. You'll see exactly what I'm talking about here, and you'll start to see when you're patient and you add this criteria into your own trading, you'll start to trade less, and you'll have a much more high probability of making more money because you're trading only really good trades, okay? So, okay, this is John Howe signing off, and I'll speak to you next video.